Hello, everyone. This is Harrison Palmer, and this is Team IKEA for the presentation for Class Management 490.
In this presentation, we will go over the strategic assessment of IKEA, specifically Inter IKEA Holdings, the parent company of the IKEA Group. This is a presentation by Team IKEA, myself, Paulo Amaral, Aidan De Silva, Ala Daropolo, and Harrison Palmer. In this presentation, we will go over a brief history of IKEA, its present and future outlook, IKEA's competitive advantage, financials, future goals, and as well as an internal and external analysis.
IKEA started as a tiny mail order company in rural Sweden and now has become a global home furnishing brand that brings affordability, design, and comfort to people all over the world.
We may have come a long way since our humble beginnings, but our vision remains the same: to create a better everyday life for the many people. This is a quote from IKEA's founder, Ingvar Kamprad. Throughout this presentation, we will focus primarily on Inter IKEA, the parent company, and how its corporate strategy affects IKEA's success and its retail division. We can see that IKEA had one company, and from there they grew to over 496 IKEA stores in 63 countries. IKEA calls this the Great Expansion. The organizational structure of IKEA is complex, with the parent company, IKEA Holdings, based in the Netherlands, overseeing the group. Inter IKEA Holdings BV is the parent company of Inter IKEA Systems, IKEA of Sweden, IKEA Supply, and IKEA Industry Holdings. Together, this is referred to as the group. The company is fully owned and controlled by the IKEA Foundation. And here we can get a better look at the organizational architecture of IKEA. And here we can see the organizations under the Inter IKEA Holdings BV. The group consists of three core businesses: the retail concept, which is the franchisee, range of supply, and industry. The group works together with franchisees and suppliers to co-create the IKEA offer and franchise business. The aim is to provide franchisees with the best possible conditions for implementing and operating the IKEA concept and to create a strong platform for growth. And here we have a better detailed map here, the pop-up, and what the IKEA refers to as the IKEA Group. And you can see it's under IKEA Holdings BV. So first off, we have Inter IKEA Systems BV. It's the furniture retailer's franchisor worldwide. This unit also deals with franchise agreements with 11 franchises that operate in more than 500 locations, including the Inga Retail, its biggest franchisee. IKEA franchises are independent of the IKEA Group. Next, under the IKEA Range and Supply, we have IKEA of Sweden AB. The IKEA organization is responsible for product design, and it's based in Sweden. This entity manages the development, design, and creation of the entire IKEA product line. Next, we have IKEA Supply, which develops and supplies the products for the home improvement and furnishing chain. We have, under industry, IKEA Industry, produces home furnishing products, and it manufactures about 10 to 12% of its total range of products. Next, we have IKEA's internal analysis. IKEA's most important core competency is its integrated, cost-conscious product design system. This core competency is a complex, difficult to replicate system, allowing IKEA to achieve their business goals and align itself to the IKEA business idea. This idea is to offer a wide range of well-designed, functional home furnishing products at prices so low that as many people as possible will be able to afford them. A fundamental idea laid out by IKEA's founder, Ingvar Kamprad.
This low-cost strategy is integrated throughout the value chain and from production to customer in order to offer reliable, low-cost, and ready-to-assemble furniture.
And here we can see some of our strengths and some of our weaknesses. One of the biggest strengths that IKEA has is the flat pack model. Basically allows IKEA to ship furniture in an ideal box, a box that's flat, that takes less space, and it's ready to be shipped to the customers, or customers can pick it up and assemble it themselves. They also have their showroom experience, their food courts, which is part of the shopping experience. Customers like that, and that's some of their strengths. So the showroom layout, for sure, the low cost. I mean, they have a low cost strategy, Scandinavian design, and they're an iconic brand. Another strength is they have a large market share, obviously. Some of the weaknesses is basically they're seen as disposable. Sometimes they're seen as cheap furniture. There has been also some failure to expand internationally, including in South America. Another issue is urban accessibility. IKEA relies on warehouses in mostly rural areas where, for example, Target has succeeded in rolling out smaller form factor stores in dense urban areas, and even some of IKEA's competitors have been doing this. Target, for example, has these small urban areas in college campuses. IKEA doesn't have this, and this is something that they might need to look at because they have mostly bigger rural warehouses. So addressing this is definitely something that IKEA should be doing. So now we move on to the external analysis. Supply chain procurement and increasing material prices have made it difficult for IKEA to keep their prices low and maintain a low-cost strategy. Customers continue to be environmentally conscious, and IKEA has designed furniture that can be easily repaired, reused, and repurposed. It continues to explore the secondary market for recycled and repurposed products. IKEA has taken a lead on sustainability by putting itself ahead of governmental mandates with a goal of transforming itself to a net zero emission organization by 2050. IKEA does fall short to its rivals in its online experience. IKEA needs to continue to invest in technology in order to be relevant online. And here, if you look at some of the opportunities, smart home technology is one of those opportunities. It needs to incorporate smart home technology into its products. Digital and e-commerce expansion. Right now, if you look at IKEA's website, it's made for you to look at the products but go into the IKEA center, the IKEA store, and buy it from the retail location. They need to really start thinking about selling products online and delivering those products, with one-click shopping like Amazon is doing. Sustainability products, they're already doing this, but they need to continue doing that. Sustainability for IKEA is going to be the future. Urbanization, they need to think about moving into denser areas like Target has. Global market penetration, although IKEA has a great international market that have expanded, there's still some markets, some global markets that they need to get into, for example, South America. And they need to improve their overall e-commerce capabilities. On the external threats, we have e-commerce competition. Competition from Wayfair, from Amazon, from Target is really relevant. It's taking sales away from them. Again, Amazon, one-click shopping. Buy furniture from us, ship it, you don't have to go to the store. Price erosion is another issue. And some of this price erosion has been deliberately done by IKEA. So Inter IKEA, once they make the product, they sell the product cheaper to the retail arm, which passes the costs or the cost savings to the consumer. Next, we have the competitor assessment. And I chose these three competitors, but there's many. Many of these companies are designing cheap and stylish furniture that can be ordered online, skipping the drive to the IKEA center and have it delivered. Amazon, like I said, one-click shopping. Jysk's e-commerce and urban centers. So Jysk is another Swedish company, and they're doing basically what IKEA is doing, but they have taken the concept of urbanization and they develop centers that are centered around dense areas, unlike IKEA. Other companies also, they've been offering custom offerings and trendy products. One of the things that IKEA is stuck on is the Scandinavian design, but you also got to be wary of people's tastes over time have changed, and some of these other companies have offered, these design ideas to the customers, where IKEA is more keen on producing its Scandinavian design. So yeah, we have three companies here: Target, and Target has had its own issues with expansion to Canada, but they have a great online e-commerce, and it basically, the competitor assessment comes down to e-commerce affordability. So if you look at Joyce, they have affordable Scandinavian design. They have a lean store format that IKEA doesn't have. They're expanding globally. So that's Joyce. If we look at Wayfair, in-depth product range, they have a great product range. Drop shipping model, so you don't have to go to the stores. Technology and data infrastructure is already there. And, they're going to continue to find opportunities, be AI driven, product differentiation, giving the customers what they need and staying ahead of the curve. So there's a lot of threats here, as we see from these companies. And they also have some weaknesses. But this is basically what IKEA needs to go up against, the competitor assessment. And this is what they're going to need to look at the whole picture. So what is IKEA's competitive advantage?
IKEA's competitive advantage is a combination of its low-cost, unique, and functional product design and strategic marketing position. Key elements in the strategy include the flat pack design and customer self-assembly, global sourcing, active supply management, and sustainability. Above all, IKEA sells practical, affordable, and stylish products that meet their customers' needs. Remember, economic of scale plus core competencies plus distinct competence plus organizational synergy equals competitive advantage.
Looking at our slide, we can see what contributes to the competitive advantage that IKEA enjoys. We have cost leadership, efficient supply chain, flat pack design, economics of scale, Scandinavian design, unique in-store experiences, brand loyalty, and sustainability.
IKEA's corporate strategy centers on democratic design, which is balancing low costs, form, function, quality, and sustainability to create affordable and appealing products for the many. The strategy is to become the global leader in affordable home furnishing by offering a wide range of well-designed, functional, and sustainable products at prices so low that the majority of people can afford them. This is achieved through aggressive cost leadership integrated across all operations, starting at product design with a targeted low price, utilizing the flat pack model to drastically reduce logistics, warehousing, and transportation costs, and engaging the customer in a self-service, self-assembly model to minimize labor experiences. The entire strategy revolves around maintaining a tight balance between the 5 dimensions of democratic design. These are low price, function, form, quality, and sustainability, all to deliver exceptional customer value.
Next, we have Inter IKEA's financial report for fiscal year 23 to fiscal year 25. Revenue has decreased from fiscal year 23 to fiscal year 24 by almost 10%. However, the net income grew vastly from fiscal year 23 to fiscal year 24, from 1.6 billion euros to 2.2 billion euros, a growth rate of almost 35%. To support affordable wholesale prices, costs to the IKEA retailers were lowered. FY24 marked a trend break with significant price decreases for raw materials and transportation. The reduction in FY24 is primarily driven by lower operating income due to higher operating expenses of the acquired retail forestry operations in the Baltics, as well as higher spending on digital capabilities and sustainability. In 2025, Inter IKEA Group, headed by Inter IKEA Holdings, announced total revenues of 26.3 billion euros compared to 26.5 billion in fiscal year 24. Sales volumes are up while gross margin is back to normal levels, following the continued effect of wholesale price decreases in FY24. In FY25, net income amounts to 1.6 billion euros, which is a return to normal levels. a shift from 16% gross profit margin in fiscal year 24 to 14.2% in fiscal year 2025 means that Inter IKEA Group earned less profit for every euro of goods it sold to the IKEA retailers. So Inter IKEA has taken a hit in hopes that the retailers sell more and keep those prices low in order to sell more. This was a deliberate strategic decision by Inter IKEA to prioritize affordability for customers and maintain sales volumes amid global challenges. Again, this is intentional by Inter IKEA, and they just want to see the volume, and they want to make sure that the retail is making money. And then the reasons for the price erosion is strategic price cuts. IKEA deliberately cut prices to stay competitive. Decline in upstream costs. The cost of raw materials and shipping has decreased, and it has significantly decreased since the pandemic. Responding to inflation, the company is rolling back the price hikes it had implemented during the pandemic. The impacts of the price erosion is lower profits for Inter IKEA and long-term brand risk. The risk that sustained focus on low prices could devalue the brand's quality perception over time. So if something is too cheap and it's too good to be true, people, customers perceive it as being cheap. Also, another issue is that recent tariffs have put pressure on IKEA, potentially forcing them to raise prices again. So who knows if this deliberate price cut to its retailers is going to stay put. Next, we will look at IKEA retail facts for fiscal year 25. In fiscal year 25, IKEA stores welcomed 915 million visitors, an increase of 1.9% compared to the previous year. So they generated on the retail side 44.6 billion euros, opened up 66 new IKEA locations, and they have 222,000 co-workers. These co-workers are employees on the retail side, and they also have 20,000 employees on the group side. Total IKEA sales for fiscal year 25 reached again 44.6 billion euros. This includes sales of IKEA products, food, and services to customers by the 13 groups of IKEA franchisees worldwide. Compared to fiscal year 24, retail sales fell marginally by 1%. This is a result of lower prices introduced in fiscal year 24, which in turn contributed to an increased sales volume of 2.6%. So Inter IKEA lowering prices to the retail side has generated more foot traffic, which is good. So again, 39 locations in Europe, 16 locations in North America, 5 locations in the Middle East, and 6 locations in Asia. We're going to look at IKEA's long-term strategy, but before we do that, we should familiarize ourselves with the IKEA business idea. While our vision tells us why we exist, our business idea tells us what we want to achieve. And if you ever visited IKEA, you'll have probably worked out that our business idea is to offer a wide range of well-designed functional home furnishing products at prices so low that as many people as possible will be able to afford them. And this is a quote by the founder of IKEA, Ingar Kamprad.
But what is IKEA's long-term strategy in all this, going forward for the next 5, 10, 15 years? Well, IKEA's goal and long-term strategy consist of a few things. They have listed out climate and circularity, healthy and sustainable living, fair and equal, and easy access and affordability. This all focuses on the area of ESG. The area of focus is the healthy and sustainable living. This is inspired by people to be healthy and live life by minimizing harm to the environment. Second focus area of climate, nature, and clarity. The goal is to drastically reduce greenhouse gas emissions and to operate without creating pollution, keeping product and materials in use. The last area that is the fair and equal. IKEA would achieve this by contributing to a fair and equal society by respecting human rights across the value chain and contributing to a resilient societies. We have seen IKEA get a C plus in its ESG rating. It is low as right now, unfortunately. IKEA has a lot of work to put into this. A lot of this does come from how its model is set up. IKEA is going to have to address how it gets its raw materials and how it makes its furniture and is going to have to do this, make changes to its model in a way where it's not creating so much pollution, deforestation, and just harming the environment in general. This whole strategy focuses on the transition to a circular business model and becoming, quote, the people and planet's positive. IKEA's sustainability strategies are set for 2030 and are aligned with the UN Sustainable Development Goals. There are 3 areas of the focus addressing the important global challenges, and they include climate change, nature loss, and unsustainable consumption of rising inequality. Another main goal is maintaining a circular economy. This is by utilizing renewable and recycled materials throughout their product line, extending product life by allowing easier repairs, reusing and repurposing products through buybacks and resale programs. In 2024, IKEA repurchased approximately almost 500,000 used items from more than 206,000 customers in 28 countries. This is something that IKEA plans to continue and grow. Resources are scarce, building materials are becoming more difficult to acquire, and government environmental mandates further add to this difficulty. A circular economy benefits IKEA financially by reducing raw material costs, increasing revenues through resales and services, lowering waste management expenses, and enhancing brand loyalty. As we get to the end, what's the future outlook for IKEA? Inter IKEA intends to maintain the current level of wholesale prices to the IKEA retailers to secure stability in the franchise system and affordability to its customers. Moderate growth in the group's revenue and volume is anticipated for the financial year of 2026, and the group expects to remain profitable. During 2026, while remaining prudent and cost-conscious, investments in development activities by retail concept, range, and supply will continue. There are some future challenges, though. IKEA faces strong competitions from its rivals, meaning the online giants that were stated before, like Amazon and Wayfair, and even some brick-and-mortar organizations like Walmart and Target. These organizations are able to leverage economics of scale and directly compete with IKEA's low-cost strategy. Furthermore, these organizations have been able to better utilize their online technologies to establish a better online shopping experience. In order to maintain its market dominance, IKEA must better utilize online technology to tie in its online shopping experience and its retail shopping experience, while expanding that smart home technology. It must be able to design products that adapt to smaller housing footprints and better suit itself in urban areas, opening smaller stores that cater to apartment living and city dwelling. Furthermore, expansion to developing countries must be met head-on, allowing for new market penetration, ensuring its ability to expand and grow. And with that, we have come to the end of our slides. I hope you have a better understanding of Inter IKEA strategy through this strategic assessment. I know I have. And now I want to give a quick thanks to Team IKEA. You guys made this possible. Thanks for all the hard work you put in. And thank you everyone for listening.